Don't underestimate the power of the Federal Reserve, the US dollar, the US Navy, the IRS, the SEC. That's a very, very powerful opponent, and they're way ahead.
Today, I had a fantastic conversation with John Pennington Jr., co-founder of a $28 billion family of funds. Over his career, he's come to think in billions. In fact, he likes to say he was a billion-second overnight success story. As you'll see in our conversation, he learned a lot in those 30-plus years. John always has a unique perspective to share. He's a true entrepreneur, a master of value creation. In fact, he co-founded multiple companies in the USA, Canada, Cayman Islands, Puerto Rico, Spain, and Germany, and retired just after he and his partners completed a successful IPO on the New York Stock Exchange. One undeniable fact about John is his passion for finance. He loves helping people understand it and use it for their benefit. He offers a lot of this insight in his book, Dollars, Gold, and Bitcoin, the Fed's Hidden Agenda and How to Profit from It. John's a great man, a true family man. Married for 38 years, father of 3, and proud grandfather to 5 grandchildren. I can tell you, he's been a gift to me as well. So it's my great honor to welcome you to my conversation with John Pennington Jr. So you IPO'd.
Yep.
That's kind of the ultimate goal for pretty much any entrepreneur. And after your 30-year journey, that had to be pretty amazing to get to that point and to finally see that goal, that milestone reached. What was your life like before and then after you achieved that?
I can tell you, any kid that comes out of college in business school, your ultimate dream in business school is maybe one day, my company could go public on New York Stock Exchange. It's not the Shanghai Exchange. It's the New York. It's the granddaddy of them all, right? So in the summer of 2021, we were able to go and do a successful IPO on the New York Stock Exchange. And it was just, it's just surreal. I don't know if people use that word all the time, but I don't use it a lot, but it was like, wow. This is something else. And I have brilliant business partners. Mm-hmm. And look, it wasn't me that took them. I did a lot of things to get there and did a lot of over the years and built, but I got some brilliant business partners that understand IPOs and stuff like that. And they did a tremendous job getting us there. We got there kind of like in record time. It was like, Christmas, and we were public at the end of July, on the New York Stock Exchange. It was fantastic. But so afterwards, I'm now retired. I'm truly 100% retired. And before that, almost up to the last year, I worked too many hours. And so now I'm going to spend a lot of time with my family. But those 16 years when I co-founded the funds way back in 2008, my first funds were 2004 and 2007. But this group of gentlemen, these brilliant business partners I'm telling you about, we all came together really in 2009. I co-founded a fund in 2008. And then we found a few gentlemen that we had to have on the team in the Christmas of 2009. And we relaunched the fund in Q1 2009 to go out and start buying apartments and buying distressed properties. And it was fantastic. We were just calling up banks and saying, what do you want to sell? And it was really, really good.
I bet that was refreshing for them too, hearing somebody who wanted to buy instead of trying to offload it.
Yes. In 2009, we were buying at greatly discounted prices. And that was our niche. When we would call up investors, we'd say, hey, did you see on the TV that Bain Capital or something bought this $200 million portfolio from Bank of America for $57 million? Yeah, I saw that. Would you like to get involved with that? Because that's what we're doing too. We're buying distressed assets from banks at way discounted property at prices. And that was one of the big draws, especially my team, my partners that were experts in these type of acquisitions. That was a big draw for investors. And investors knew, some investor has $1 million or $3 million or $500,000. They knew they're not large enough to take down such a big portfolio. But a group of us in a fund, in a limited partnership with $100 million could take down big chunks like that and make deals with banks. And so we all, grouped together and put it all in a fund and went out and got investors, accredited investors, and we pulled our money together, and that was the first fund in this group of gentlemen, my great business partners, and that was 2009. And then 2021, we go public on the New York Stock Exchange with $28 billion assets under management and managing,
True unicorn.
thousands of employees in 33 states. Yeah, yeah. It was absolutely when I can tell you this, when we hit our first $1 billion in AUM, asset under management, I was like, are you kidding me? What do you, and I got the calculator out and I calculated it out and I'm doing the calculator and how much is a billion? Really, how much is it? And a billion is 31.7 years of seconds. So if you started counting right now, 1, 2, 3, 4, we would still be here on your podcast 31.7 years from now for you to get $1 billion, right? And then we got the 2 billion, 3 billion. It was just like, wow. Mm-hmm. And we hit $28 billion right before we went IPO. So that was, it's a tremendous growth story and success story. And like I said, I have extremely brilliant business partners that we all grouped together and everyone had special talents and it just worked. It was just like serendipitous, all of our talents coming together and just exploding.
You've had a lot of investor relationships in that time, even since before you started your $28 billion company. How have those relationships changed and how did they evolve from the time when you first started working with investors to now?
Yeah, so way back when we first started my first fund in 2004, our minimum investment was $100,000. But the general partner gets to write the LPA and the PPM. And in our LPA and PPM, we said, our minimum investment is $100,000. And there's a little, however, there's asterisks, however, footnote, the general partner can at any time allow someone into the fund less than, So if someone came to us and said, look, I don't have $100,000, John. I only have like $62,000. I'd be like, you know what? You know me. We're friends. I'm going to go talk to my partners. I'm pretty sure we can get you in, right? Because it was our first fund, right? So our third fund, we were up to $250,000 minimum. And I think our fourth fund was $1 million minimum, right? And so, but now it's just kind of a level, it's a leveling, I believe. My last year there, we just kind of said, listen, if you come in for 100 million, your fees are lower. If you come in for 10 million, your fees are a little higher than the 100 million dude. If you come in for $1 million, if you come in for 250, you just choose your fee schedule on how much you can come in for. So we kind of pushed the minimums away and allowed the investor, the accredited or the qualified client or the qualified purchaser, allowed them to decide what type of fees they wanted by how much money they subscribe to our funds. So that's kind of how it changed over time, where your first fund, you're trying to grab every little dollar you can get. Every dollar counts, and every dollar still counts. But it was a kind of a graduating process.
John, I loved your book, Dollars, Gold, and Bitcoin, the Fed's Hidden Agenda. Awesome book. Love the concepts you bring into it, especially the way you talk about the U.S. dollar. You talk about it as the greatest product of all time, I believe. So what do you think people don't understand about the U.S. dollar that you wish you could teach them?
The reason I write the book, and this is a discussion I had when my kids were they're 14, 15, 16, 17, always talked about economics, always talked about how banks worked, how banks made money, how the Fed, the biggest bank in the world, makes money. And, the U.S. dollar, if you think about it, is a product. It's the number one product of the U.S. government. It's a product. They make 1 trillion of these products, and me and you will work 80 hours a week to get them, and other people will lie, cheat, and steal to get them. And then they'll make another 1 trillion of these, right? 1 trillion. And then we will work 80 hours a week to get more, and other people will lie, cheat, and steal to get them. So it sells better than hotcakes, right? Listen, Americans have an insatiable appetite for hotcakes. They will stand in line for 30 minutes for a really good hotcake, right? But the US dollar is way better than that because it's worldwide. So the US dollar, if you think about it as a product, it answers a lot of questions on how the world economy works. And so that's kind of the premise of the book, the first half of the book anyway, to get to that point where understanding it's a product. And they're the SEC, the IRS, the presidency, the U.S. Navy, the IRS, the agencies of the world, of the U.S. government. I know the Federal Reserve has mandate. low unemployment and high GDP and all. I get that. But that's not their number one job. Their number one job is to protect and promote the US dollar, to protect and promote their number one product. And as long as they do that, then everything around the world works. Okay. So let me tell you a quick story. It's 1990-ish. Okay. The Soviet Union just crashed a year or so before. Okay. And PepsiCo, Pepsi, they're the first company to really go into Russia. Okay. Moscow. And they're selling Pepsi everywhere. And they're a parent of Pizza Hut. Pizza Hut is a subsidiary of PepsiCo. Okay. So, uh, uh, Pizza Hut goes into Moscow and the story is really difficult. It takes them a long time to get these stores open. It's really a huge effort. And they finally get the stores open. They start selling pizza. It's great. They're having great success. But they have all these rubles. And at the time, other countries weren't accepting rubles, and the capitalistic system had not taken hold. So they were having a hard time getting cheese. They're having a hard time getting eggs. They can't, so they're, buying products from other countries, right? And they need US dollars. So they can't figure out how to get their rubles transferred in US dollars. And they think, wait a minute, we'll just call PepsiCo our parent company. They've obviously figured this out. Okay, so this is the funny part of the story. So they call PepsiCo, and PepsiCo goes, oh yeah, we figured it out. PepsiCo had negotiated with the Russian government. When they got a large amount of rubles, PepsiCo was allowed to purchase submarines and warships. And then they would take the submarines and go sell them to Ukraine or Argentina for US dollars. Can you believe this? This is the gymnastics people go through, the financial gymnastics people go through to get US dollars. So me and you, when we go around the world and we just hand out US dollars and everyone takes them, that is decades and decades and decades and decades of marketing their number one product. And other countries don't have this, right? We have an enormous, US Navy, but so like back to your original question, marketing the US dollar as a product over these, 100 years or so almost, it's become a very successful marketing campaign. And that is the number one job of the Fed, Treasury, IRS, the Navy, everybody. And as long as that works, sometimes I think Congress, a lot of times, they miss that number one job of theirs because they're spending too much money. But the other agencies, the people who are around for a long, long time, they know what their number one job is, and that's to protect and promote the U.S. dollar.
Now, how do you see that playing out over the last 3 years? The economy's been wild. No precedence has been lived up to, right? It's just been consistently different than past precedents. So how do you see this theory that the Fed's number one job is to protect the U.S. dollar, and that's what's always at the forefront of their interest? How do you see that playing out, or how have you seen that playing out, and where do you see that going?
Yeah, so let's just do a little history lesson. In 1929, there was the big stock market crash. A few years later, they invented the SEC, Securities Exchange Commission, so that we would never have this happen again. Okay, and John F. Kennedy's dad, Joseph Kennedy, was the first dude head of the SEC. The reason they chose him is because he made so much money in the crash. It's like asking the fox to teach you how to keep other foxes out of the hen house, right? He knew how it all worked. So he was the first dude over the SEC. So this is 1933. And they came out with the Act of 33 and 34. The only reason they have the Act of 33 and 34 is because it hit on the Christmas holiday. And they did the Act of 33 and 33. And then a month or two later, they did the Act of 34. So, but what that did was that also at the same time, the president in May 33, right at that time, 1933, the U.S. government outlawed gold in the United States of America. Your grandfather, my grandfather, if they were caught with 5 gold coins in their pocket, they could go to jail. So the U.S. government basically said, listen, our economy is way down. We need all U.S. citizens to turn in their gold. We'll hold it at Fort Knox. We'll give you paper money for it, okay? And you turn in all your gold, and this will shore up the U.S. dollar. And this is the gold confiscation in 1933, May 1933. And so from that point on, You could have a gold watch, yeah, no problem. A gold necklace, no problem. But gold bullion, you could not have in the United States of America. So then in World War II, World War I and World War II, we were selling all of our product. We came in both of those wars late. And we were selling all our products to France for gold. Yeah, we'll send you ships, we'll send you wheat if you send us gold. And so World War II, we came in late. And then by 1944, the war is almost over. We know we're going to win. The reason we're making, I think we're pumping out 50,000 airplanes a year. 1,000 airplanes a week we're pumping out. Germany's making, I don't know, 5,000 planes. Some crazy. We're doing 20,000 tanks. They're doing 1,200 tanks. We know the numbers. We're going to win. So what happens is 44 countries sent 1,000 people to a little place in New Hampshire called Bretton Woods. And they came up with the Bretton Woods Agreement. And the Bretton Woods Agreement, it doesn't basically say this, but it kind of says this. He says, listen, everyone's Navy after the war is gone. A Navy is one of the most expensive things for a country to have. So France's Navy's gone, Italy's Navy's gone, Russia's Navy's gone, China, Japan, Germany, everyone's Navy's gone except the United States and a little bit of Britain. So the United States said, listen, we're going to do this. Everyone in the world, if you just trade US dollars and let the US dollar be the world reserve currency, you don't need navies. Just buy and sell all of your oil in US dollars and we'll be your Navy. So a little country somewhere in the world doesn't have to have a Navy. They can ship their goods around the world and not worried about pirates or all kinds of stuff. So that was the Bretton Woods Agreement. And the reason they did that, and get this is a statistic that's crazy. I can't even believe this. In 1944-ish, the United States had 66% of all gold bullion in the world. We had it. And that's why the US dollar was backed by. So what happened was the French franc was no longer backed by gold. The French franc was backed by the US dollar, which was backed by gold. Okay, so fast forward to 1971. Okay, so the French are onto us and we were doing wrong. We were printing too many paper dollars. And the French basically said, I think it was Charles de Gaulle. He was President de Gaulle at the time. And I think he said something to the effect of, listen, we know you're printing way more money than you have gold. So what they did is, and this is the thing, your grandfather, my grandfather couldn't own gold. But someone in France, if they had $100 bill, a French citizen could turn in a $100 bill and get gold. That was legal. So France sent over 2 ships to one of our harbors. I think it was New York. And they said, we're here. Here's our US dollars. We want our gold. And this is on August 15th, 1971. President Nixon it's on a Sunday night. He gets on the TV and he says, listen, market manipulators around the world are trying to hurt our dollar. So temporarily, the US dollar is no longer backed by gold. That was it. Sunday night. Next morning, the markets open up. Guess what? The US dollar became a fiat currency at that moment. And we've been, ever since 1971, that's been our deal. So, and then right then they, basically, made a treaty with treaty with Saudi Arabia. Saudi Arabia agreed they would sell no oil except in US dollars. Again, why? Because it's our number one product and our team is protecting and promoting our number one product. Our US Navy is doing that. And so that's 1971. And so we've been a fiat currency ever since then.
So your 3 rules, right? You got the 3 rules for real estate: location, 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 right? And then your 3 rules for investing are never fight the Fed, never fight the Fed, never fight the Fed.
The Fed is so enormous. Yeah.
Which, knowing this background now, it certainly is. What are we supposed to do with that?
If you finally get in the mind of the Fed, you kind of get in the mind of this number one product, you kind of start understanding world events, okay? So just last year, you had you had China broker a peace deal between Iran and Saudi Arabia. Why? Why did they do that? China has been trying to purchase oil from Saudi Arabia and other places, not using US dollars for about, 8 to 10 years. And they told us this about 8 to 10 years ago. And I believe 8 to 10 years ago, the Fed and the US government says, okay, China, you don't want to play the US dollar game anymore? Fine. And so since that time, China's economy has, I mean, there are hundreds of companies that have pulled out from China. Japanese companies, German companies, US companies in the last 3 or 4 years. Foxconn, which makes iPhone, they pulled 300,000 workers from China and sent them to other India, Thailand, places that buy US oil with US dollars. Okay? So China is still, trying to so China knows that our power is the US dollar. And so they want to de-dollarize the world. And so I believe my theory is that if someone tries to threaten the US dollar, then we go back to our, number one product. What we're going to do, we're going to protect and promote it. And so we have put the pincers on China. Now, China did it to themselves too. They borrowed way too much money. They built a lot of real estate in the real estate crash. They did it to themselves, but we poured gas on that fire. And right now, China is in a 1929 depression. It's really bad. Unemployment rate, the finances, the banks. It's really bad in China right now. And it's partly to do because the U.S. determined years ago, maybe 6, 8, maybe 10 years ago, not really positive, sure, but somewhere right about that time, they said, okay, China's going to become an enemy to the U.S. dollar, and we have to now uh, um, mitigate or hurt them because they are competing. So if you understand these things, so that's why China went to Saudi Arabia and Iran. Iran, who do you hate more? Saudi Arabia, or do you hate the U.S.? Oh, we hate the U.S. more. Okay, great. Okay, do you guys not realize that the U.S.'s power is the U.S. dollar? And the reason Saudi Arabia can't sell us oil in the yuan is because you guys keep attacking them. And the U.S. has an aircraft carrier. They have F-35s. They have 5,000 troops in Saudi Arabia, and they give them satellite. So Saudi Arabia has to have U.S. dollars. Okay, so Iran signs this peace treaty, hoping that sometime in the future, Saudi Arabia will go, you know what? We don't have to take US dollars anymore. We can take the yuan, and that will start to crumble the US dollar's dominance around the world. So, look, in 1960, the dollar was about 45% of world reserve currencies. In 2001, it was like 73%. And today, I think it's about 57, 56% of world reserve currencies. The second place is the euro at 20%. And then there's the yen at 6%. There's another one there at 6%. I can't remember. And then look, the Chinese yuan is only 2.7% of world reserve currencies. It's got a long way to go. People say, well, it's going to take over. 6, 7, 8 years ago, I would have said, yeah, China probably going to rival us, And now I'm like, no. I have this debate, not an argument. I have the debate with some people about replacing the US dollar. And I say, listen, let me just give you kind of a visual. I love people in Arizona. I have friends in Arizona. So what I'm about to say is not against Arizona. Okay. But let's just say the state of Arizona, we both agree that all the water is bad. Okay, great. It's all bad. Okay, what do you want to do about it? We want to replace it. What do you want to replace it with? Gatorade. Great. So we go around the whole world and we grab all the Gatorade and bring it. It's not even 1/10 of the amount of water we need. So you can't replace the bad water until you have something to replace it with. And that's the deal with the yuan being 2.7% of the world and the US dollar. It's so embedded. You might crumble the US dollar over decades, but this whole thing, a crash and stuff like this. And, I know the BRICS nations, Brazil, Russia, India, China, and South Africa, and a few others are trying to launch the BRICS dollar. I get it. The BRICS dollar is a commodity-based dollar. It means if you have a barrel of oil or a bushel of wheat, you get so many BRICS dollars, okay? And you're trading these dollars based upon commodity. And these countries are rich in commodities, okay? I understand why China wants to do this. I understand why Russia, if I was the president of Russia or the president of China, I'd be doing the same thing because I would hate the US dollar fiat system. I'd hate it. But it's the system, and it's going to take decades and decades. The advantage that the other countries have that we don't have is our presidents are temporary employees. They're there 4 to 8 years. Xi Jinping in China just changed a couple years ago the constitution of China that he could be president for life if he wants to. Putin has been president for 27 years. He might be president for another 27 years, right?
Mm-hmm.
And I actually believe Putin is the richest man in the world. I know Elon Musk is very rich and Jeff Bezos. No, Putin is Putin owns a whole country, right? So anyway, we have a disadvantage that our guys are temporary employees. And so they can only have plans for 4 to 8 years. These other dudes can have plans for a long time. And that's why Putin and Xi Jinping, they've been buying gold for the last 6, 7, 8 years. And that over time has helped the price of gold go up.
Well, and that's a great transition too into the next step, the next evolution of currency. We're seeing in Bitcoin right now and cryptocurrencies, which Bitcoin has taken on a lot of those properties of gold and its scarcity and its inherent scarcity in the way it's built. And in your book, you really talk about how there's potential for the Fed to be actually controlling prices or actually boxing in, as you say, that Bitcoin price to control it in a sense, much in the way J.P. Morgan did with gold, decades and decades ago. So how do you see that playing out moving forward? Maybe you can explain a little bit more of your theory behind that too and your ideas, especially with the digital dollar too.
Okay, it's December 2018. The Federal Reserve comes out and they say, listen, next year, this is December, next year we're going to raise interest rates 3 times, okay? And you're like, why would you raise? You have record unemployment, high GDP. You have, I got a couple notes here. I got to remember what I wrote down here. Record unemployment, low interest rates, high GDP, and record just economy. So if you have all these great things going on in December of 2018, why are you going to lower? Why are you going to, you're going to raise interest rates 3 times? That made sense. Okay, so this is December. We're going to raise interest rate 3 times. Less than 45 days later, they go, oops, we're sorry. We're not going to raise interest rate 3 times. We're going to lower interest rates 3 times. And I was like, I have an economics degree. And I'm like, wait, something huge just happened. I'm not sure what happened, but something huge just happened. So I got my antennas up, my entrepreneurial antennas, and I'm listening. And so March, a few months later, I read this report. In Europe, there are $3 trillion of sovereign bonds trading at negative interest rates. I have an economics degree. I don't even know what negative interest rate is. A negative interest rate is, if you buy this bond, you are mathematically guaranteed to lose money. Why would that even exist? Why would a bond exist that if you buy it, you're going to mathematically lose money? But I don't know. There's $3 trillion worth in Europe. Then in July, then this is 19, summer, like 4 months later, it ballooned to 13 trillion. Okay. So I put my US dollar product thing and I'm going, aha. The Federal Reserve, I believe, this is my theory, the Federal Reserve just saw this and said, wait a minute. If you're going to borrow US dollars, we want you to borrow, if you're going to borrow dollars around the world, euros or whatever, we want you to borrow US dollars. So to compete against the euro, they artificially lowered their interest rates down to almost zero. Now, it's negative 0 in Europe, right? So if you're going to borrow for the next 30 years, borrow ours. So they did that on purpose because they have, it's a product. Someone is price cutting, they price cut it, right? And so if we borrow, me and you borrow a loan for 30 years on US dollars, guess what? For 30 years, we have to get US dollars to pay that back. That creates demand for the US dollar. That's one way to create demand for the US dollar. Another way is have people around the world, you can only buy oil in US dollar. That's another way, right? The SWIFT system, the system that we have set up for wire transfers, it's a US dollar based system. In 1972, if you're in Germany and you want to buy oil from Saudi Arabia, you don't wire your Deutschmarks down to Saudi Arabia. No, you wire your Deutschmarks from Germany to the Federal Reserve in New York. They switch them into US dollars, and then you wire your US dollars to Saudi Arabia. That creates insatiable demand for US dollars. So this is the this is the Fed pushing through everything. So anyway, so that's the summer. So let me get to JP Morgan. A year later, JP Morgan is sued by the SEC and they lose. And they have to pay $930 million fine. What did they do? They manipulated and controlled the precious metals market for 9 years. 9 years they did it. They were fined almost $1 billion. Now, no one went to jail as far as I know, but $1 billion fine. So I believe the Federal Reserve at that point learned how you can control a worldwide precious metal market. And that's in summer 2020. And I believe they saw Bitcoin as a competitor to the US dollar, and they put their clandestine plan together. And I believe today they are trying to manipulate and control the Bitcoin market, right? And so this is my theory of my book, and I give you all the reasons why I believe, the evidence that why I believe that this is happening. Okay, but if you look just last year, okay, it's October 2023. Bitcoin's $27,000. Okay, and by January 11th, it's $49,000. That's quite a run up. Okay, this is my theory. Okay, they held off giving anyone the authority to have a Bitcoin ETF for a couple of years. They just held it off. They held it up in court. They still have a lawsuit against XRP because XRP sole purpose is to circumvent the SWIFT system, which decreases the demand for US dollars. So if you, again, protect and promote the US dollar. So $27,000 in October, $49,000 on January 11th. Okay, January 11th, there is unprecedented inflows into Bitcoin. Okay, you just see the chart. There's people buying and buying. There's 11 companies that one day, the SEC allows 11 companies one day to start selling Bitcoin and ETF. There's a record number of purchases. And over those 11 days, it drops 20% in price. How can that happen? This is how it happens. The SEC, being the fox in the hen house, tells all the 11 companies, BlackRock included, hey guys, we're going to allow you to start selling or trading Bitcoin. This is October. You guys should buy Bitcoin so that when your customers start buying it, you can sell it to them. So they buy at 27, they buy at 29,000, they buy at 35,000, they buy at 40,000. And when it goes on January 11th, all these people start buying and they sell it to you. So they bought at 27, sold it to you at 49 because they were in on the scam with the SEC. And now the SEC has partners, or BlackRock owes it to them. They're part of the group now. They have a plan. I'm not sure what the plan is, but they are trying to control it. That's why it went down 11%. You would think the day that it goes live, you would think record inflows, Bitcoin price has to go up. But it doesn't. It goes down 20% in 11 days. Therefore, the only thing I can derive from that is they were tipped off that they were going to be approved in January. And they were buying and buying and buying. And the SEC now has well, you owe me now. So now you're on the team with the SEC. Our number one job is protect and promote the US dollar. And we can't let anything threaten that. And so they're not trying to kill Bitcoin, because if you kill it, then Ethereum will take its place. They're just trying to control it. And that's why I came up with the term boxing in Bitcoin. I believe they're manipulating it as well as they possibly can. How do they know how to do this? They learned it from JP Morgan, and JP Morgan was fined $1 billion for manipulating the gold and silver market, which is way bigger than Bitcoin, for 9 years. So this is part of my theory of my book.
Now, as we're looking at the Fed, looking at these next 2 to 3 years, we've got a lot of stuff happening. There's a political, we've got an election coming up. We've got, who knows what's going to happen with these wars on the other side of the world right now, and what our involvement might be. Having seen the investments from a publicly traded entity from the inside, having seen things as you have from your business career, and of course from your insights looking in from an economic perspective, what would you see looking ahead? What indicators would you be looking for?
Okay, so here's the problem. No human, I don't believe, has ever experienced a government that can spend $1 trillion every 100 days. The United States is spending $1 trillion every 100 days. Okay, so can you have a recession when the government is spending that much money and people are willing to accept that money? This is, while you've heard these people for 2 or 3 years, the market's going to crash, and it keeps going higher, because you have something that's never happened before. We had the 2020 COVID happened to us. Everything shut down, and stimulus. The CHIPS Act, the stimulus packages for COVID, relief, trying to reduce student loans. There's too much stimulus, so that's why when you watch YouTube and you're following economic people, you have all of there's not a lot of consensus, deflation, inflation, flat on economies, because no economist has a model for this. So the answer is, well, look, well, I shouldn't say I don't know the answer. The answer is, look, if they keep it, just logically, if they keep spending $1 trillion every 100 days, one day they can't do that. Now, is that next year or is that 2033? I don't know. They're very, very powerful. They have rules, and then they change their own rules, right? So I don't know how that can work. So anyway, I don't know what to tell you, but just by spending that much money over a period of time, you have to understand that hard assets eventually will go up in value. Gold, Bitcoin. Bitcoin's not a hard asset, but it's an asset. It actually is probably one of the hardest assets in the world. Silver, real estate, anything that's hard asset, oil, it has to go up because of just the inflationary rule. Look, the Fed's kind of stuck. They have a Congress. It's kind of like a couple. One spends a lot of money and the other one has to pay for it. And the one that spends all the money says, hey, when are you going to put the money in the bank so I can spend some more money? And the Federal Reserve, look, people get mad at the Federal Reserve. They get mad at Powell for making all these snakes and stuff. Look, I tell people, stop being mad at Powell. Look, let's go back 30 years. I'll be the congressman and you be the head of the Fed, okay? And I will spend more money than you imagine, right? But I come to you and I say, make sure that everyone accepts the US dollar around the world. They've done a pretty good job. But the Congress won't stop spending. And I don't think they're going to. And so therefore, the Fed has to do these gymnastics to keep their product, the number one product in the world, viable throughout the world. And they can probably do it for 3 years, 30 more years. I'm not sure. So as long as you get that in your head, that's kind of the big game. People like to play games. I know there's kids that play these video games all weekend long, like a marathon. The biggest game in the world is China with Iran and Saudi Arabia, with people trying to buy oil, not using the US dollar, like Putin trying to sell his oil and trying to sell his gas. This is the biggest game, the US dollar, the currency. There is no bigger game. And we send our Navy around the world to promote and protect our number one product. Bitcoin doesn't have a Navy. That's we do. And so we might be able to proliferate this for 30 more years, right? I don't know. But what I'm trying to say is don't underestimate the power of the Federal Reserve, the US dollar, the US Navy, the IRS, the SEC. That's a very, very powerful opponent, and they're way ahead. They have 58% of the world reserve currencies. It's like, they're way, you got to catch them and you got to slow them down. It's hard to do right now. And so that's when I say, if you're going to be investing, and that's why it's hard right now to invest. Is it going to go up or down? Is it going to go sideways? But in general, it seems like commodities, hard assets, have to go up over time because they're printing $1 trillion every, 100 days.
John, what a great spot to end on. That's brilliant. I really, really appreciate it.
I'd love to do it again. Love to do it again. Thank you.
Take care.